Hello, Bob, and thank you once again for joining us. Let's start with the major currency pairs, shall we? Coronavirus is still in the headlines and affecting the markets, but what key stats can we expect from the major currencies given the new month is just about to start?
Relatively busy start to the month of February. For the US dollar, we've got ISM manufacturing, non-manufacturing PMI numbers for January. Those are due out on Monday and Wednesday. And on Wednesday, the ADP non-farm employment change figures for January. Focus will then shift to initial jobless claims figures on Thursday. Any bounce back through to 900,000 levels, and expect market risk sentiment to take a dive. And at the end of the week, we got the government labour market numbers. So you got non-farm payrolls and the unemployment rate. That will be the key areas of focus. For the euro, private sector PMI numbers for Italy and Spain, and finalised numbers for Germany, France, and the Eurozone. Expect Italy and the Eurozone's numbers to draw the greatest amount of interest, assuming there's no major revisions to those of France and Germany. Other stats in the week include German retail sales figures and factory orders, which will also draw plenty of attention. For the pound, relatively quiet week. We've got finalised PMI numbers through the first half of the week. Main event of the week, however, is the Bank of England monetary policy decision on Thursday. No moves expected, but following some pretty dire service sector PMI numbers and the continued lockdown measures and the threat from new strains of the virus, we could hear some dovish chatter and the talk of possible support. So those are the key areas of focus through the week.
So some interesting stats that our traders need to keep an eye on in regards to the major currencies. But how about the commonwealth currencies? What should we be focusing on there?
Relatively quiet week for the commodity currencies. For the loonie, markets have to wait till Friday for trade figures and employment numbers. Expect the employment numbers to have the greater influence at the end of the week. Through the early part of the week, expect inventory numbers, crude oil to have an impact, and obviously market risk sentiment in general, and PMI numbers from the US, China, and obviously the Eurozone. For the Aussie dollar, we've got retail sales and trade figures due out on Thursday, retail sales on Friday. Retail sales figures will be the key driver, with the RBA reliant upon consumer spending to support the economic recovery. Main event of the week is the RBA monetary policy decision on Tuesday. No moves expected, to expect the rate statement to be the key driver. For the Kiwi dollar, quiet week, just employment figures for the fourth quarter due out on Wednesday. They will influence the Kiwi dollar, though expect PMI numbers from China to have a greater impact in the week.
So a close eye should be kept on the Reserve Bank of Australia in terms of the Aussie and quarterly employment figures for the Kiwi. So we'll keep a close eye on those. But reverting to Asia now, what can we expect from China and Japan in the start of the new month?
Out of China, relatively quiet week. Key stats due out on Monday and Wednesday. The market's preferred Kaiser manufacturing PMI number for January due out on Monday, and then the services PMI due out on Wednesday. These follow the NBS numbers that are due out over the weekend just past. So key will be the Kaiser manufacturing PMI. The markets will be hoping for the Chinese economy to continue its recovery from the economic meltdown that we saw in the first quarter. Obviously, COVID-19 cases, reports of any spike will be a key area of focus when it comes down to China. For Japan, we've got finalized PMI numbers, barring any material deviation from prelims, shouldn't see too much influence there. Household spending at the end of the week will draw some interest, though we're not expecting the numbers to have a material impact on the Japanese yen.
So relatively quiet in Asia at the start of the month. Hopefully it will pick up in the coming weeks. Lastly, geopolitical risk and fundamentals. With coronavirus still raging across Europe and vaccine levels still not as high as they should be, how will the markets react to this?
In terms of fundamentals, well, COVID-19 remains the key driver for the markets. Obviously, that's continuing to hurt economies around the world. So what we're really going to be looking for is a pickup in vaccination rates. Bloomberg Tracker provides some good numbers there. Infection rates and obviously vaccine supply. The EU's obviously been hit by supply issues. They've therefore had a low vaccination rate coupled with upward trend on infection rates that have led to extended lockdown measures. We've also got the new strains of the COVID-19 virus to consider as well. So many of those dynamics to factor in through the week ahead. Obviously, the US foreign policy and stimulus are other key areas of focus. Obviously, Biden's not easing, the pressure on China, so that will be an area of interest as well ongoing.
Well, that's all we have time for today, Bob. Thank you so much for joining us, and I'll see you again next time. That was the week ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the latest developments by following us on all our social media outlets.